a true story, how I actually secured a 1.75% interest rate. Now, most people would think that this is an impossible interest rate to have, but that's what I have on my current home. During my search for a lower interest rate, I found the perfect recipe to get the lowest interest rate and have a reasonable mortgage payment. I actually purchased my home initially with a 4.25% interest rate, and then when prices went up, or home prices went up, I refinanced and I eliminated my mortgage insurance, which was my main goal when I refinanced. I decided I wanted to have a 15-year mortgage. Even though my payments would be higher, I would be able to secure a lower interest rate by doing that, and that would lower the amount of interest I was paying on my mortgage. So that was one of the strategies. Another strategy that I used was I took my savings and I paid off all my debts, my credit cards, other debts that I had, and that bumped up my credit scores, and that also allowed me to have a lower interest rate. And then second, I also used a specific strategy you're going to learn in this course, which is I paid or I bought down loan points. So, or loan discount points as they're commonly known. So what I did is if I qualify for one interest rate, I paid money to have a lower interest rate. And by doing that, I was able to save on interest since I was planning on living on the home for a longer period of time. Now, if you're just going to live in the home for like 6 months or less than a year, it might not benefit you at all. So you have to take that into account. Now, the third strategy, or the last strategy, or one of the last strategies that I used, was I decided I was going to go ahead and pay the lender fees, which are usually underwriting fees, administrative fees, application fees, or processing fees. I paid those up front. I didn't include them in the interest rate, which a lot of times lenders don't ask you. They just bulk them into the interest rate. So you get a higher interest rate. So yes, initially what happens is you don't have to pay for those things, but you do get a higher interest rate. But what a lot of people don't know is those discount points and those lender fees can actually be put into your mortgage. So you're going to finance those in the mortgage so that you don't come out of pocket to pay for those. But now you're going to have a lower interest rate, which means you're going to pay less interest over the life of the loan. And then lastly, I do want to mention that I have a single family residence, which is a house, and not an apartment or a condo, which is how banks or lenders define them. And by having that also lowered my interest rate. Let's get started with the next lecture.